There are several reasons why self-employed individuals get audited. In this video, I am going to go over several of the reasons why and what you need to be doing to make sure that you don't get yourself in what I like to call a tax tangle. The number one reason why self-employed people get audited is because they underreport their income, bar none. It happens over and over again. And there's several reasons why this happens. I want to tell you the reasons why this happens and what you need to do. One of the reasons why this happens is because a lot of times self-employed people are just in that hustle of trying to make their money. I get it. I used to be self-employed at one time. But what's really important is to make sure that even when you're in that hustle of trying to make your money, that you get yourself adequate books to track your income. Self-employed people have unreported income time and time again. Sometimes it happens very, very innocently, but let me tell you how that happens. When you are self-employed, people are typically paying you from a multitude of ways. They will pay you in cash. They will send you a check. They may pay you by merchant account, by Zelle, by Venmo, and you got money coming from all directions. You are transferring money into your bank account, and sometimes you may even double count that money. The key is going to be to make sure that you know exactly who's paying you, the exact amount that they're paying you, because what ends up happening is the people that pay you are sending in 1099 forms to IRS with your information on it. They're not giving you a copy of that 1099 form. And the next thing you know, you file your income taxes with the amount of income that you're reporting, and then IRS has already received something different. And guess what happens? There's a mismatch, and you then get an audit letter. So make certain you keep track of your income correctly. Another reason why self-employed individuals are audited is because they take aggressive deductions. I understand when you're building a business, you're spending a lot of time, a lot of effort, a lot of energy. You're putting money out all the time. And you think that everything that you're spending your money on should be a tax write-off. And it might be, but how you take those tax write-offs are very, very important. Many times I see self-employed individuals writing off payments to, for example, to their credit card company. And I will see them write down Citibank, $5,000, Citibank, $400. Well, your payments to Citibank, or your payments to your Wells Fargo Visa card, or your payments to your American Express card are not write-offable. Or your payments to American Express are not a tax write-off. And over again, I will see that as a deduction on your taxes. And the deductions really are unreasonable for the amount of revenue that's sitting on the tax return. If you can imagine, when your tax return goes into the system, all IRS sees is a list of numbers. And when IRS sees those lists of numbers, they don't have any other way to determine what you're doing except for compare what you're doing to other people that are doing what you do. So IRS compares your tax return by your industry code to similar businesses in your geographical location. So for example, if you are in the Los Angeles region and you are a beautician and you're in a certain zip code, IRS is going to compare your income and expenses to the same types of businesses in the same region. And they're going to be looking for what they call a diff code. That basically means if your tax numbers differ more than a certain percentage over others that are doing similar businesses in a similar area, they are going to flag your return for audit. And that is one of the things that a lot of self-employed business owners don't understand. Your expenses may be legitimate and they may be deductible, but if they're not reasonable and IRS doesn't have an explanation, you're going to get flagged for an audit. So it's going to be very important that you document things properly, that you are descriptive in your expenses so that you can help paint the proper picture of what it is that you're doing in your business and you don't come across of having aggressive business deductions. Another area where self-employed people flag audits is showing business losses year over year over year. Typically, when a person is self-employed, they're generally building their business up. They may be working a W-2 job and building their business. Their expenses may very well outpace the income that they are showing on that tax return. But I want you to be aware that IRS is paying attention. From the very first day that you file an income tax return, IRS is tracking that business and tracking the income or losses. And they are going to make sure that they are analyzing your return to see if you're trending towards a hobby or trending towards a profitable business. If you show a loss for 3 out of the first 5 years, IRS is going to flag your return for audit. Why? Because they're going to come in and ask you, are you a hobby or are you a business? So what can you do to protect yourself? One of the things that you can do is make sure that when you're looking at your tax return, that every year that your gross income shows at least $1 more. That's right. So let's say, for example, you show gross revenue, gross sales, gross income at $1,000 year one. And let's say your expenses are $5,000. So you have a loss of $4,000. The next year, I want gross income to at least be $1,001. Why? Because that shows a trend that you're starting to improve in your income. IRS is looking at those things. So protect yourself from an audit by making sure you realize whether or not you're showing a loss 3 out of the last 5 years, and are you showing any trend toward your business improving, higher revenue each year and less expenses. And when you do that, you can minimize the chances of there being an audit. Another concern that happens every single year, which flags audit, is literally not knowing how to properly complete the tax forms. I cannot tell you how many people come to me to represent them in an audit, and when I look at their return, I can tell exactly why that return flagged an audit. It's very important before we even get to the numbers of a tax return that we actually fill the forms out correctly. So when you are self-employed, you may be filing a Schedule C, you may be filing a single member LLC return. It's important that you go through and that you fill out that information correctly. Put the name of the business on the form as it is listed with IRS. Don't shortcut the name of your business. Some of you may have a business name, but then you're doing business as something else. When you are registering your business with IRS, you register with your formal business name. The public may know you as a different business, but when you file your income tax returns, you want to make sure that the name you originally used is going to be the name that shows up on that tax return. That's very important. You want to make sure you put the proper EIN number if you have one. A lot of you have multiple EIN numbers. Make certain you're using the EIN number that is associated with the business for the self-employed business that you're running. That gets clients audited quite a bit. Another thing that gets clients audited quite a bit is when clients write off on their tax return bad debt. That term, bad debt, that's typically a trigger for an audit. I know how that happens, and let me explain to you how it happens. You did work for somebody, you invoiced somebody, and you did work for them. That person chose not to pay you. And maybe that invoice was $1,500 and you never collected it. So then you write off on your tax return $1,500 bad debt, except for the majority of taxpayers are cash basis taxpayers. That means that you report income when it's received and you report your expenses when you pay it. Because you never received that $1,500, you cannot take it as a write-off. I understand that person owes you that money, and I absolutely get it. But because you are a cash basis taxpayer, that's not a write-off. So on your tax return, there's a checkbox that says, are you cash basis? Are you accrual basis? If you're cash basis and you have the word bad debt, that's going to flag an audit automatically. That's going to flag an audit automatically. If you have the box checked accrual and then had bad debt, that wouldn't flag an audit. So understanding what those check boxes mean are very, very important. The other thing that I see self-employed people do where they don't do it correctly on their tax return is they will be in a business that requires inventory. A lot of self-employed people are selling things online. They're in the retail business, and most people that are in the retail business have inventory. That means that you may have on hand a supply of blouses, a supply of jeans, a supply of tennis shoes that you're selling to your customers. But you don't fill out the cost of goods sold section of your business return. You don't have beginning inventory, you don't have purchases, and you don't have ending inventory. So IRS looks at that and goes, here's a person that is in a business that should be tracking inventory and they're not tracking inventory. So guess what IRS is going to do? They're going to flag your return for audit because they know that you are expensing out all your inventory as supplies and they're not supplies. So they're going to flag your return for audit. If you're a person that owns a business and you're self-employed selling a product, you want to make sure you track inventory. You want to make certain that you are putting it on your return in the proper categories and that you're marking the proper boxes. That's going to be really key. The other thing that gets self-employed people audited is failure to file their tax returns on time, failure to file their 1099 forms, failure to do the basic compliance. Make certain as a self-employed individual that you understand what your filing requirements are. You have to file your business tax return every single year. You may have to pay estimated taxes every single year. You may need to issue 1099 forms to your vendors every single year. Make certain you file on time, you do it correctly so that you can avoid getting yourself in a tax tangle. If you enjoyed this video, I want you to like, comment, and subscribe, and I can't wait to see you on the next video.